Good afternoon. Welcome to the Office of Tax Appeals. We're ready to begin with the appeal of Parcell. The OTA case number is 230-212-520. The oral hearing will be live streamed. Present today is the stenographer, Ms. Alonso, who is reporting this hearing verbatim. To ensure we have an accurate record, we ask that everyone speaks one at a time and does not speak over each other. Also, please speak clearly and loudly. When needed, Ms. Alonso will stop the hearing process and ask for clarification. After the hearing, Ms. Alonso will produce the official hearing transcript, which will be available at the Office of Tax Appeals website. The Office of Tax Appeals is an independent and neutral agency. It is not a tax court. All three judges are co-equal decision makers, and we can ask questions at any time. I'd like to offer a few reminders to help the process run as smoothly as possible. First, please ensure your microphone is not muted when you speak. Otherwise, your voice will not be picked up on a live stream. Second, please remember that these proceedings are being broadcast live, and anything said today and any information shared today is publicly viewable on the live stream. With that said, are there any questions before we go on the record? Okay.
No, Your Honor.
No.
With that said, then, are we ready to go on the record, Ms. Alonso? All right. We're opening the record in the appeal of Parcell. The OTA case number is 230-212-520. This matter is being held before the Office of Tax Appeals. Today's date is December 18th, 2024, and the time is approximately 9:30 a.m. This hearing is being convened electronically. Today's hearing is being heard by a panel of 3 administrative law judges. My name is Keith Long, and I will be the lead administrative law judge. Judge Tommy Leung and Judge Andrew Wong are the other members of this tax appeals panel. All 3 judges will meet after the hearing and produce a written decision as equal participants. Although the lead judge will conduct the hearing, any judge on this panel may ask questions or otherwise participate to ensure that we have all the information needed to decide this appeal. As a reminder, the Office of Tax Appeals is not a tax court. It is an independent appeals body. The panel does not engage in ex parte communications with either party. OTA will issue an opinion based on the parties' arguments, the admitted evidence, and the relevant law. For the record, will the parties please state their name and who they represent, starting with the representatives for Franchise Tax Board?
Sarah Fassett from Franchise Tax Board.
Cynthia Kent with the Franchise Tax Board.
Thank you. And for appellant?
Jessica Monroe, representing the Parcells.
And Ms. Parcell, can you just state your name for the record, please?
Certainly. Terry Parcell.
Thank you. And my apologies. I've just been notified. I said that this hearing started at 9:30 a.m. It started at approximately 1 o'clock. I apologize for any confusion that may cause. Today, we have one issue in this appeal, and it's whether appellant's claim for refund for the 2017 tax year is barred by the statute of limitations. At the pre-hearing conference, appellants indicated that appellant Terry Parcell may provide witness testimony. Would appellants like to provide testimony?
Yes, Your Honor.
Okay. Ms. Parcell, I'll go ahead and take your oath now. So if you could just raise your right hand. And
It is raised.
Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you. The exhibits for this appeal consist of FTB exhibits A through L and appellant exhibits 1 through 2. Can appellant please confirm that there are no objections to FTB's exhibits?
We have no objections, Your Honor.
Thank you. And Franchise Tax Board, can you please confirm whether there are any objections to appellant's exhibits?
This is Sarah Fassett. No objections.
Thank you. Well, this hearing is expected to take approximately 45 minutes, and um, appellants requested 15 minutes to make their opening presentation and witness testimony. Ms. Monroe and Ms. Parcell, you may begin when you are ready.
Thank you, Your Honor.
Thank you.
For the 2017 tax year, the Parcells had multiple losses accumulating to over $3 million for California purposes. They still timely filed an extension, but knowing that no taxes would be due because of this loss, and due to not only financial, but also medical and family extenuating circumstances, they did not file their tax return by October 15th for that on 2018 for the 2017 tax year. I'm going to let Ms. Parcell speak a little bit to that for a few minutes, just to give a broader scope as to some of those circumstances, and then I'll jump back in.
Well, thank you. The circumstances were extremely dire. Not only did we have the bank sitting in our office and cooperating with them 100%, but my husband had to have emergency back surgery, which he did in late December. And that was the time when the bank had their keeper in place, and when I went back to work after trying to take care of my husband, they told me I had 1 week to get my things in order and get out. So we get home and so forth, and after a few months, I learned that my son had OD'd at 51 years old. So that was traumatic, and there were just a lot of reasons, starting with the bank trying to sell all of our assets out from under us, which they did, and we were in complete compliance with what they wanted to do, so we tried to do the best we could. But those were some of the reasons that the return didn't get filed or any of that done in the proper time period. And I appreciate your time.
And during this time, the Parcells were still receiving FTB collection notices that continued over the next couple of years. So between all of the hardships that they were facing, receiving FTB notices showing a balance due, none of which ever reflected a withholding payment on the sale of property of almost $80,000, despite that withholding being correctly reflecting primary Social Security number and being forwarded by the closing agent. They didn't have any notice that they actually had a credit balance with FTB. Had they had that notice, they would have acted more quickly to file those tax returns. But really believing it was just going to be a zero balance and they just needed to provide the information to FTB on the tax return to show, look, no taxes are due. Please stop collection activity, which was further stress for them. When they did get around to filing those tax returns with a new CPA, they realized that they had this withholding payment for this same tax year. As such, they quickly worked to file those tax returns. They submitted them October 5th, 24. So that was within 4 years of the automatically extended due date. And at that point in time, FTB still had not applied the payment to their account from the withholding. FTB actually had sent a notice on November 2nd, showing still a balance due of approximately $3,500. And then finally, upon processing the full tax return, credited their account and then said basically, sorry, not sorry, but you no longer can have those funds back for not being timely. And I think it's important to note the inequity that's resulted from this because the Parcells are relying on FTB's notices. And at the same time, while FTB makes a mistake on not applying that withholding payment, which was significant, if the taxpayers had made such an error, they would be held accountable for such an error. And in this instance, while filing within 4 years of the extended tax deadline, we are respectfully requesting that that withholding payment be not just credited to their account as it should have been from the beginning and therefore would have provided proper notice, but be refunded to them per the October 22 tax return filing. And yeah, I think that this just, the extenuating circumstances are clear in this case. So that is all for our opening statement.
Thank you. Before we move forward, does Franchise Tax Board have any questions for the witness?
This is Sarah Fassett. No questions. Thank you.
Thank you. I just want to give my co-panelists the opportunity to ask any questions if they have any. Judge Leon, do you have any questions? Judge Leon, you're muted. Now you're not muted, but we can't hear you. Something is going on.
Okay, how's that?
Got you now.
Okay, got too many mute buttons on me. I said no question at this time. I will have some at the end. Thank you.
Thank you. Judge Wong, do you have any questions?
I have no questions at this time. Thank you.
Thank you. I do just want to make sure that I clarify when we're talking about the real estate withholding payment, Ms. Monroe, you're discussing the payment that was made on July 25th, 2017, that's related to Exhibit B of respondents of your reply brief?
Yes, Your Honor, thank you.
Thank you. And Ms. Parcell, I'm sorry to ask questions about your hard time. When all of this stuff was going on, do you have a time frame for when you were working with the bank and your husband's injury, your family?
Well,
issues?
the issue with the bank went on for some time because we had they were selling every asset that we had. So that it just took some time because it wasn't at a very good time for real estate.
Okay.
So they took a couple years actually until it was over. It was well into 18, and we were asked to close up the business and get out by the end of December 2016.
Okay, thank you. I don't have any further questions. Let's see, just check my notes here real quickly. Franchise Tax Board, you requested 10 minutes to make your presentation. So we can move forward with that when you're ready.
Thank you. Good afternoon. My name is Sarah Fassett, and I, along with Cynthia Kent, represent Respondent Franchise Tax Board, or FTB, in this matter. As Judge Long said, the sole issue on appeal today is whether appellant's claim for refund for the 2017 tax year is barred by the statute of limitations. After receiving no tax return for appellants for 2017, respondent issued a demand for tax return and a notice of proposed assessment, or NPA, based solely on appellant husband's personal income sources. The NPA did not include any income or credits related to the sale of real property. After receiving no response from appellants, the NPA went final and the balance became due and payable. For tax year 2017, appellants made no payments other than withholding voluntarily or through collection efforts. Respondent ultimately received appellant's untimely filed 2017 California tax return on October 10th, 2022. Respondent treated the tax return as a claim for refund, but had to deny the claim because it was filed after the statute of limitations had expired. California law imposes strict time limits and other requirements for filing refund claims, including tax returns that claim refunds. To be timely, a claim for refund must be filed within the later of the 3 following periods: 4 years from the original due date of the return, 4 years from the date of a timely filed return, or 1 year from the date of an overpayment. The taxpayer bears the burden to show that a claim for refund was timely filed, and ignorance of the law does not excuse the failure to file a timely claim for refund. Additionally, respondent does not have a duty to discover an overpayment or notify a taxpayer of such overpayment, nor does it have any obligation to inform taxpayers of the time within a claim must be filed. The arguments made by appellants in support of their assertion that their claim for refund was timely all fail. Because appellants did not file a timely return for the 27 tax year, either by the original due date or within the state's automatic 6-month extension for filing, their claim for refund must have been filed either within 4 years from the original due date or 1 year from the last overpayment. Here, the 4-year statute of limitations expired on April 15th, 2022, and the 1-year statute of limitations expired for the withholding credit on April 15th, 2019. Appellant's claim for refund, again, was filed on October 10th, 2022. Appellants appear to argue that because a federal extension of time to file for the 2017 tax year was sent to the Internal Revenue Service, that grants the appellants additional time to file a claim for refund for state purposes. If a timely filed return is not received within the extended due date, no extension exists. There is nothing in the law, nor have appellants pointed to or provided anything that allows for the submission of a federal extension of time to file to extend California's statute of limitations for a taxpayer to make a timely claim for refund for state purposes. Informal claims for refund, as defined in Revenue and Taxation Code 19322.1, may toll the statute of limitations if the informal claim is made within the statute of limitations, but before the full amount of tax penalties and interest have been paid. Here, the appellant's October 10th, 2022 income tax return cannot toll the statute of limitations because it was made after the expiration of the statute of limitations on April 15th, 2022. As previously mentioned, FTB has no duty to discover or report overpayments to taxpayers. Contrary to appellants' assertions, their failure to file a timely claim for refund was not due to FTB's error. Withholding credits from sources other than wages, such as ones related to sales of real property, are reported and then applied when there is a valid return filed and the corresponding income is reported. While appellant's tender of the completed Form 593 for the 2017 tax year shows it was filled out and a check was sent to FTB, it also shows that appellants were on notice of the over $79,000 in withholding when they signed that FTB Form 593 in July of 2017, which was related to a multiple $1-million sale of real property. Further, appellants were also put on notice to file a tax return or to otherwise respond in regard to the 2017 tax year from FTB's demand for tax return, the NPA, or the approximately 10 notices related to FTB's collection efforts for the 2017 tax year, all of which spanned over 2 years. There is no record of appellants responding to any of the mentioned correspondence. Finally, the statute of limitations cannot be waived based on reasonable cause, and unfortunate circumstances will not delay the expiration of the statute of limitations for filing a claim for refund. While FTB is sympathetic, refunds are only allowed to be granted to the extent allowed by the statute of limitations. Therefore, because appellant's claim for refund was filed after all the statute of limitations periods had expired, and California law bars refund claims made outside the statute of limitations period. Respondent's denial of the claim for refund was proper and should be sustained. I am happy to answer any questions you may have. Thank you.
Thank you. Judge Leon, do you have any questions?
No questions at this time, but at the end. Thank you.
Thank you. Judge Wong, do you have any questions?
No questions. Thank you.
All right. Then we will move forward with appellant's presentation. Ms. Monroe, you requested 10 minutes to make your closing presentation. And you may begin when ready.
Thank you. While the full tax return wasn't filed until October of 22 for that 2017 year, the entire time FTB had indicated that the Parcell's account with FTB still had a balance due. And therefore, when the tax return was filed, upon filing that that return and seeing that there was a withholding payment that should have been credited to their account, we're requesting that it be taken into consideration that the claim for refund was timely filed by the tolling because FTB wasn't applying that credit. And as such, it was still showing a balance due and should reflect refunding the taxpayers the amount that was taken that entire time. In addition, I'm going to just reiterate the circumstances of when an error is made by FTB. Again, the taxpayers are continuously left in the lurch, having to kind of pick up the pieces, whether they have the resources or not to do so. And we definitely understand the requirements of the statute and that there are rules to be followed. But in this instance, with all of the pieces of evidence that we've brought forth in terms of filing and how things were incorrectly not being reflected on their account, we still respectfully request that these be taken into account and the refund be issued to the Parcells. Thank you.
Thank you. Before we conclude today's hearing, I believe my co-panelists do have questions now. Judge Leon?
Yes, thank you, Judge Long. I have questions for each party, and I'll start with Ms. Monroe. Ms. Monroe, you had mentioned earlier that when the new CPA took over and started filing the returns in 2022, that CPA discovered the $79,000 withholding payment. How did that CPA discover that? What did he look at?
I believe the CPA pulled old documentation from old files, and Ms. Parcell, you might want to correct me if that is correct on how they found the withholding payment from pulling old files.
Well, it was found when they looked at the closing statement, and that's what they go off of. What they had done, they had sold my daughter's house out from under, and her condo actually, and they took the payment that was necessary to within that closing statement, the $79,000, I believe it was, and that's how they did it. They said that has to be done.
Right, and I'll add actually that I know that the CPA, they were working on several years at the same time. So there was just a mass accumulation of documents over all of those years, and they were able to sort through what applied to what year. And that's when we began the process of trying to correct the situation.
Okay, so Ms. Parcells mentioned it was her daughter's condo. So
Yeah.
how does that withholding get attributed to the Parcells account if it's the daughter's account condo?
Well, when Tab Bank, who is out of Utah, uh, came in to the company and said, well, you either put $400,000 into the company or go the other direction and start winding it down. So we had to wind it down. And in doing so, they made us come to their attorney's office and give them a quit claim or whatever they call it. I call it a quit claim
Mhm.
to every asset that we had any part of. And we did it
Okay.
without having an attorney with us. We
Mm.
just
Okay.
way over equity, they took equity way over what we owed them. But that's our deal,
Okay, thank you.
our fault.
And Miss Monroe, were any federal returns filed? Were there refund claims with the IRS? Any
There,
problems there?
I apologize. There were federal returns filed at the same time. They were filed simultaneously. I'd have to take a look and see if there was a refund on the federal side, which I can do really quickly. Terry, if you happen to know off the top of your head and want to speak to that, but let me.
I don't. We have never had any issues with the Internal Revenue Service.
Let's see. I have a copy of the federal return here. And I can quickly look. I believe it was a huge loss for 17. Yeah, and for on the federal side for 2017, the loss was over $1 million. So
So
no time.
there were no outstanding withholding credits on the federal side then.
There were none. No.
Okay. Okay, thank you. Ms. Fassett, when Franchise Tax Boards issued the NPA with the Mr. Parcell's sources of income, was one of the sources the real estate that was sold?
It was not. Nothing on the MPA was connected to a sale of real property in 2017.
Okay. And so when the when the FTB's reply brief talks about this courtesy of including withholding credits on the NPA, is only for income that the the basis of the estimate of income? Is that what you were talking about? There's a portion in your reply brief that talks about estimating the income on the NPA, and then it goes on to say, as a courtesy, franchise tax board would include withholding amounts connected with the income.
So it would just be connected to the sources that were reported on the
Mhm.
MPA.
And so in this instance, the real estate sale was not as one of the sources we reported on the NPA.
Correct. There was nothing connected to that sale of real property
Mhm.
on the MPA.
Okay, thank you. Judge Long, I'm done.
Thank you. Judge Wong, do you have any questions?
No questions. Thank you.
Thank you. Well, then I believe we are ready to conclude our hearing. I want to thank you all for joining us today. This case is submitted on Wednesday, December 18th, 2024. The record is now closed. The judges will meet and decide your case later on, and we will send you a written opinion of our decision within 100 days after the record is closed, which is today. Today's hearing in the appeal of Parcell is now adjourned. Thank you.